In this video, I'm going to be breaking down my performance over the last 3 months in my Top 1 Futures live account, the account that I am trading here live on YouTube almost every damn day. I'm going to show you the process that I use, the very simple process I use to get this done, so you might be able to look at your own results. I think it's a good time to do this as we come into 2026, and I do have some things changing with my trading. I want to show you guys what my results look like and talk about some of the advantages and disadvantages of being in a prop firm live account after getting kicked up from Sim. Let's hop into it. Now, I have my own way of journaling. I do a little bit more intensive journaling than what you're going to see here, but this is really just raw data that you guys can use if you're trading on pretty much any platform. This came from the Project X platform. I've broken it out and I've actually used ChatGPT to break down, do some stats for me, breaking out for break-even trades, which I think is really important to do and displays a little bit more of the data the way that we need to see it, which I'm going to show you with no break-even trades broken out, with break-even trades broken out, as well as some additional data that's not just from the trading itself. Upon reviewing my own trading journal, what I see as far as what happens after I exit a trade, the time that I'm taking some of the trades, it's really not included in the breakout that you would get just from Project X. You can enter a lot of that data right into ChatGPT, some of it a little bit manually. You could do the screenshot thing, but it's really helpful. I tried to go this route with this video because a lot of guys just don't journal. They don't review at all. Let's say you haven't journaled at all, but you have an account that you're doing okay in, or maybe you're not doing great in it, but you want to get the data from it. You want to see what's working, what your stats are, maybe try to find some areas where you could improve. This is a super easy way to do that. So let's go ahead and take a look at this. This is my trade performance summary from October to December 2025, as we are coming right into January this year. This is from October 7th, to be exact with this, all the way to December 31st. This is for the Top 1 Futures 15K pre-live account that I've been trading live with you guys since I got it. I think 99% of trades have been taken and or called live. I tried to go back and find one that I didn't actually take on the live stream and or call out in real time everything, including management and closing, in my free Discord, which I hype nonstop on the lives. I haven't found one, but just out of air of caution, I'll say maybe there's a couple on here that have not been called out. But the point of trading this account live with you guys was to display all this in real time. So if you want to verify this stuff, because it's written out here from ChatGPT, it's all live on YouTube. Hundreds of hours where I trade live 9:15 a.m. almost every damn day. So let's hop into it. I have, from that time, about 3 months, 34 total trading days. My return on risk capital has been 60%. Green days have been 26. Red days have been 28%. Winning days, green versus red days, 76, almost 76.5%. My average winning hold time duration is 119 minutes. Average losing time duration is 71 minutes. Largest winning day, just over $1,000 at $1,042.20. Largest losing day, 992. And now I'm going to talk about what some of these stats mean, how you can interpret them, again, what I'm doing well, what I'm not doing well, what I need to do better. And, I just kind of discuss what this looks like compared to what I see across a lot of my trading. I will note, I've had a pretty good run in this account. I think as a whole, I've traded well. The market's been in my favor to a degree, and there's certainly definitely room for improvement. But as a whole, for me, I'm pretty happy with what I've been able to demonstrate relative to this, this account, right? I've been able to hold on to it, again, across 34 trading days, which is not an enormous amount of data. You'll see the total trades at 42, everything included. Not a ton of data, but enough to get a feel, right? What's kind of going well and what's not going well. I'm happy with the number of green days, just to start out on this, versus red days. Having a nice, almost 3/4 of the time ending green is positive. You can tell I am holding my winners longer than my losers. I think that is a positive thing as well. We'll get into holding my trades longer in a minute. What I'm also really happy about is that largest losing day being capped at under $1,000. I don't have a daily loss limit from them at $1,000. It's actually at $3,000. It's much wider, but I've been happy that I've been able to not go on tilt, not, continue trading, do anything crazy, and run myself into the ground on any one, red day. I would like to increase a whole lot of stats that we're going to talk about, but being able to manage that downside risk when I am off, when the market doesn't agree with me, and just clipping it at under $1,000 is very helpful. Now, I'd like to increase the size of my largest winning day and my largest winning trades, which we'll talk about in a bit, but having those be at least equal to start, I think is really important. A telltale sign of doing something wrong is if you are putting up larger losing days than you are winning days, right? Having, losing days that are 3 times the size, for example, of your largest winning day. That's going to be, it's going to be an issue in the long run. So let's continue on. I've broken this out by including break-even trades under $150 for me. I'm considering break even. I think I don't know that any trade was actually over $100 in this sample size, but you'll see that small subset and I'll actually show the P&L from it. But first, this is including break-even trades that are under that plus or minus $150 amount. You'll see kind of how this skews things and why I do like to break it out from just what you'll see from Project X or from other platforms. And then again, just plug it into ChatGPT or do the math yourself, use a spreadsheet, because that break-even trade can really skew things, especially if they're all small wins or all small losses, right? So total trades in this sample size is 42, total winning trades 32, losing trades 10. Again, this is with break-even trades, which I'm going to talk about. Win percent, really high win percent on this one, 76.19% win rate, including those break-evens. You'll see this change in just a minute. Average win, 350. Average loss, 560. Average win-loss ratio, 0.63. Now, this is definitely low. I do not intentionally run a negative risk to reward. Again, you're going to see a little bit of the break-even trades eating into this and increasing win rate, decreasing risk to reward, which is why it's important to break it out if you're going to look at your data. But it's not as good as I'd like it to be, so we'll talk about that in a minute. Largest win, again, largest loss and largest win, almost the same as that largest win and largest losing day. A little over 1,000, a little under 1,000. Profit factor of 2. Expected value per trade is positive. That's all good. 133.79. Trade frequency, which is important to talk about. I'm around 1. I'm a little over 1 per day, kind of indicating that you can also tell by the total trading days relative to the amount of trading days in the month. I've had quite a bit of no trade days in between 3 months to have traded 34 trading days out of all the time the market was open. Some holidays in there as well, right? Coming into November and December, we had quite a bit of normal days the market should be open that we didn't have an opportunity to trade. But as far as trades per day, 1.24, right, is my average. Here's an interesting one and something that I specifically look for that a lot of the software just doesn't give you. Direction, right? Breakdown on direction. Long trades, I'm taking less long trades than I am short trades. 47.62%. Short trades, 52.38%. And here's a really big skew, and the reason I like to break this stuff out, including break even, which we're going to look at this even more, my win rate, my hit rate on long trades, on trades that I've taken buys on, is 80%. My win rate on shorts is 72.73%, right? So pretty big skew there. I'm taking less long trades than I am short, and I'm winning more on my longs than I am on my short trades. Let's take a look at how this changes just a little bit if I break out for break-even trades, defining anything as under $150. Again, I think the largest break-even one that I classified as break-even was around $100. Majority of them were under that. I'll just skip to one section quick to let you know that I had 16 break-even trades, or what I'm classifying as break-even trades, and the net P&L from all of those 16 trades was $167.75. So it is positive, but important to note that that back and forth subset is not a big factor when it comes to the P&L. Now, taking a look at core performance, excluding break-even trades, which I think is more important, right? If you're taking a bunch of break-evens, you should know how much you're taking for break-evens, and then what happens after you take those break-even trades, which I'm going to get into. Total core trades, 26. Winning trades, 19. Losing trades, 7. My win rate decreases when I break out break-even trades to 73.08. My average win increases, my average loss increases, but that overall average win to loss ratio, as in like a risk to reward, also does increase. So this displays a little bit more clarity on what my trading actually looks like in this account, a 73% win rate and a 0.73 average win versus average loss, also referred to as risk to reward, but technically this is an average win versus average loss ratio. Now, I'm going to stop right there for a second. That's definitely something that I would like to change. I am taking my profits too quickly in this account, and I'm taking full losses. As you can see, I have a lot of full, what are considered full-size trades, not break-even trades, not getting past that $1,000 mark, skewing the average loss to be larger, right? And I need to make that average win bigger because I have a lot more opportunity on those winning trades. I'm going to talk a little bit further about that as we get down there. But I could tell you my win rate being 73 and holding this long over, multiple months, that's too high. It's really too high for what I'm going to look for on an R multiple. I know that, my edge is just not that strong, and it's due to having a average win smaller than my average loss, which is really not how I'm intending to trade and not what the market has to offer me more often than not based on me doing my review. So it's important to note that, kind of not only are you making money, great. Are we taking payouts? Great, which I am. On 11 payouts in on this account, none being massive, right? You can see the percent per return relative to risk capital, but been able to hold on to this account, take 11 payouts from it. But, is it sustainable? What's going on from a risk to reward, win rate, expected value perspective? If you want to work yourself towards a Top 1 Futures live account like this, code RDF is going to get you the best deal. Better than the email, the Discord, the website, anywhere that you see, or at least as good. It supports me, supports the channel, supports you with the best deal. I'll link it right here. Feel free to check it out. Head to the site, see what the best deal they have. Code RDF is going to get it done. Remember, guys, I'm partnered, I'm affiliated. I stand to make money. I can't be unbiased if I stand to make money. Continuing down, largest win, 1,045. And again, this is actually the same because the break even doesn't affect that. Largest loss, 993.75. Can't remember if the largest day and largest loss is exactly the same or whether I've had 2 trades on those days. Profit factor right there, round 2, 1.99, showing here an expected value, 2.09 and 66 cents. Now, I'll also note something that skews this a little bit is I've had days where I'm not risking the exact same amount to make the same amount, right? So if you are not taking the same risk per trade or even risk per day and you vary that, you're going to vary your data, right? I've gotten more consistent with it so I could really track this, and just by the nature of the way that I'm trading, it is more consistent, but it is important to note that there were some times in here where I sized down, took smaller wins, took smaller losses, and that can start to skew data, right? If you're sizing down and you take wins on those days that are technically full 1R wins, you size back up, you take full losses, that's going to skew your data, right? Whether or not you're doing that, you do have to look at your raw data at some point and say, hey, what's working, what's not working. Take a look at trade frequency. If we break out the amount of full trades that I'm taking, you can actually see this does decrease 26 trades relative to the 34 trading days. Now, again, those are not counting break-even trades. So, the way that I look at this is I'm still going to have a little bit over 1 trade a day. I'm just going to be holding those break-even trades. Now, here's where it gets even more interesting. It's something I've talked about on my live sessions. When I look at my core trades, right, the stuff that I haven't taking break evens on, I have even less long trades and even more short trades, 38.46% long, 61.54% short. And the skew on the hit rate between these is drastic. 90% hit rate on longs. I almost can't miss on my long setups. And then 62.5% on the short win rate. Now, this is obvious if you just take a look at the U.S. indices over time. If you're carrying too much of a short bias, especially in a bullish market that we've had all the way into the end of the year, these results make sense, right? You could tell I was trading from October to December and taking too many shorts and what that hit rate looks on shorts, especially for me who are holding my trades for that larger movement throughout the day. So taking a look at this right off the bat, right? Looking at my core trades, looking at it with break even, I know that another thing that could potentially help me increase my win rate, increase my risk to reward, my average win to average loss is looking at the direction that I'm trading. I have to take a hard look in the mirror here and go, why are you so short biased? Why are you taking more short trades than long trades? And why is that continuing if it's not working for you? If the data is showing you that you have a much higher hit rate on longs versus shorts. Some things that I'm looking at to do is to potentially be just in general more cautious of taking those short trades, of being able to, hold myself more patient to wait for that long setup. Looking at the higher time frames, really taking a look at where we are relative to the tools that I use, VWAP, order flow, cumulative volume delta, volume profiles. Take a look and be cautious of getting in short on something that is not generating as much of a positive win rate and even an R multiple as the long side. Now, just kind of a general review on this. And again, this is really data heavy. I'm not talking about how I trade because I show you guys that live every day. If you want to watch the way that I'm trading in this account, again, feel free, hit subscribe, hop on the live sessions, 9:15 almost every day. You can watch this stuff play out in real time. You can go back and watch the sessions if you wanted to. Here's what ChatGPT says for me, and then some of the stuff that I've intentionally added in here, right? I didn't prompt it to say this. I didn't ask it to say this. This is my raw data. I've asked it to, again, break out winning and breakout break-even trades, and then also break down this data. This is its pre-prompted results. Strong overall edge, 2.0 profit factor across most data sets. Long trades consistently overperforming shorts. Hit rates 90% on core longs, 80% on all longs. Losses are controlled in frequency, preserving expectancy. Winning days align closely with trade win rate, showing consistency. So my average win rate is similar to my average winning day. Strategy performs significantly better after early market volatility, which I'm going to get into a little bit more detailed, and what's working specifically for me and what's not working. Again, looking at time of the day that I'm trading, what happens after I take a break even, what happens after I close my trade out. So here's some of that. Management and execution improvements, again, from additional review. So this is more data that I've inputted, right? You can do this the same without even journaling, just by going to your executions, right? You take a break-even trade, all of your break-even trades. What happens after you take that break-even? Does price continue to move in the direction of your trade, or does it continue all the way down to stop you out, right? What happens when you're trading? Where do your wins and losses come from a time of the day perspective? For me, it's pretty simple. In this account, I'm almost exclusively trading NYSE session open, so they are all right around the same time. I don't have to break out by, Asia, London, New York, anything like that. But I have something to discuss here, which is going to be important. Now, observation. For me, majority of my break-even trades would have been winners if not managed, right? So when I go back on the chart, and you can watch this from my live trading, unfortunately, almost every, not all, but almost every trade that I've taken a break-even on would have been a full winner, a large winner, or at least a positive trade. They're infrequent. It will happen. Out of the 16 break-even trades that I've taken, some of those will be full losses, or if I had held, for example, indefinitely and never closed just to watch what happened, if a stop or target didn't get hit, even though I don't run a fixed take profit, they would have ended for a smaller loss than they would have just being a break-even. But overall, over that basket of trades, more often than not, and the move for me is to not go stop loss to break even. I have to accept that some of those trades will go all the way to that full stop loss, because more often than not, they are continuing in the direction of my trade. So for me, it comes down to execution, right? I am using my discretion, I'm using my intuition, I'm using whatever tools I'm using to go stop loss to break even, but my data is showing me really clearly over a decent sample size that that's not helping me. I am better to not touch that trade, to let that thing run all the way to a stop or all the way back down into profit. No matter what, right? Even if I've been in profit, if it's immediately starts to go into drawdown, your data might not show you the same, right? Your data might show you, hey, every time you go stop loss to break even, 80% of those trades are continuing all the way to your stop loss, right? You have a really aggressive entry style, whatever it is. You might find that, going halfway to stop or scaling out is the best risk management. But as a whole, my execution definitely needs to improve by really not going stop loss to break even. It's a pretty simple answer here. Allow trades to reach full stop, expand into larger winners, right? This will increase the average win size and overall expectancy. Now, in general, this is going to decrease my win rate, right? Because I will accept more frequent losses by not stopping myself out right at break even plus a couple ticks, but it should increase my average R multiple, my average risk to reward, average win to average loss, because I'm going to take on more and larger winners, right? And as a whole, as long as this holds true over, pushing into the future, this should increase my overall expectancy, right? It should help my P&L. Number 2 is holding winners longer. The observation here, right? When I go back on the chart, I throw my executions on, I take my screenshots, I look at what happens after I exited my winning trades. What happens? More often than not, the market continues in my direction by a significant amount. Again, not always. Out of all of the winning trades, there were a handful there that I exited really well and the trade came back on me. But the amount of times and the amount that the trade continues to move in my direction after I've closed out outweighs those times where the trade comes back. So to me, this is showing me really simply, I need to hold my winners longer. Big surprise. Almost everybody needs to hold their winners longer. There's very few that are greedy traders that find themselves being able to, clip and or not close out trades and then have them come back on them. I have to accept, and it lays it out right here. In GPT knew this, a slightly lower win rate in a higher R multiple, right? Higher expected value. Why would that happen? If I am constantly clipping my trades as soon as they get into profit, I'm going to take a lot of small winners. And then when I take that L, it's going to be a full loss, right? Maybe $1,000. If I am holding for the higher R multiple, right, and I'm generating that higher risk to reward, a larger win relative to that loss size, I'm inevitably going to have more trades that come back on me, trades that I could have clipped for a small profit that come all the way back to stop me out, right, because I'm not going stop loss to break even or attempting not to. So that is something you're going to have to accept. It's important to always reflect on the double-edged sword. It's easy for me to say, well, I'll just hold my trades into infinity. Okay, what does that really look like? What does that look like over all of these trades? If I take a look at my trades, right, majority of them continue to move into profit. Majority, not all. There were some that I exited for a nice profit, maybe not as large as I would have liked, right? But they came all the way back to stop me out. The question you ask yourself, do those outweigh? Yes. Okay, I know I need to hold my trades longer. You can also have an idea of how much longer, how much more you can expect out of the move. You're going to hold to oblivion, 10 to 1 R. You're going to hold, just a little bit longer. For me, this is not a drastic change. It's not that I need to hold for forever and ever and ever, but there is a significant amount more that I could grab out of these trades before it starts to skew the other way where I'm holding way too long and now I start to get trades that come back on me. Third here, we've got time of day performance. And again, this is an interesting one. If you're on Project X or maybe even Tradeovate, I don't know if it breaks it out for you, but you could take a look at when you're entering trades, what is the result of those trades, and is there a skew? And for me, something that's continued to hold true, but I really wasn't as understanding of how strong this skew is. The closer I am to that NYSE Open, the worse my hit rate is. So this is objectively the data. 4 out of 6 losing trades occurred before 9:15 a.m. Eastern, as in I entered them before 9:15 a.m. Eastern. They didn't play out before 9:15, but the entry came within the first 15 minutes of the open. Out of all my winning trades, and we know I have a positive win rate, more winners than losers, only one winning trade out of all of this data was entered before 9:45 a.m. Eastern. I think it was important to note that I did have quite a few winning trades entered before 10 a.m. I had 5 winners before 10 a.m., but it's really clear that that first 15 minutes of the open and even up towards that 10 a.m., because I still think getting close to that 10:30 a.m. initial balance setting, I have a significantly worse hit rate. I am taking significantly more losses. My win rate erodes closer that I get to 9:45 a.m., or at least within that first 15 minutes. So for me, the improvement's really simple. Back off in those first 15 minutes. I have believed to a degree that I have a setup that presents itself there where I can enter really aggressively, but my data is showing me that waiting more patiently in those first 15 minutes to 30 minutes of the open is going to be important. Chat lays it out here as delay entries unless A+ conditions are present early. What I've noticed on these trades that I've taken losses is something also unique. Had I just waited another 15 to 20 minutes, taking the trade in the same direction, similar risk structure, similar thesis, a lot of those could have potentially been winners. Not all, but some of those could have potentially been winners. I was just too aggressive on this, mean reversion style entry or maybe even continuation style entry that I'm trading off of the open. This isn't a big surprise either. Really, most of this stuff is just par for the course, guys. Hold your winning trades longer. Don't go stop loss to break even. Don't clip your winners too early. Be careful trading in the first 15 minutes of the most volatile session of the day. But I think if you don't ever break this stuff out, you're never really able to review. And even when I'm doing well in this account, I've done fairly well. I certainly would like to do it a lot better, creating a lot larger frequency and amount of wins, size of wins, larger payouts, right? I think I've done okay. And I think a lot of other guys taking payouts, almost every week that they've had the live account and holding on to the live account would start to just kind of fall back and say, it's all good. I don't need to review. I don't need to improve. There's, no areas where things are going really well for me and things are going really poorly for me. So definitely some improvements there. Another really cool thing you could do with this data, if you just break out the basics like win rate, risk to reward, the amount that you're risking per trade, and your total starting capital, which you should have a rough idea of, or at least the data that you're putting up in whatever account you're looking at this info from, you can use a free trading equity curve simulator. If you guys have questions on this, I'll throw it in my Discord. I'm not partnered or affiliated with these guys. You could just Google one, but you could plug in those metrics that I just stated, and you could take a look at what the result would be. You could run the simulation multiple times, but you could take a look at this one that I have. I'll screenshot it so my editor can throw it in here if you can't see it from the screen. I put in first the results that are actually including everything. 76.2% win rate, the risk to reward ratio that I am ending up with, which is a 0.63, risk being the 1, right? And the amount that I'm entering being the potential reward. The risk per trade, which is about $1,000 in the account that I'm putting up. You can also use your average loss number, which is about $1,000 in the account that I'm taking on. And your total starting capital, this is a 15K pre-live account with top one. You could see what happens. You could give yourself, an idea over the next 100 trades. What's my potential for profit if I make it through that many trades? What's my maximum drawdown? What's my maximum consecutive losers or maximum consecutive winners over the course of the next 100 trades? You could edit this and, adjust it a whole bunch. You also get a trading equity graph result. Now, again, this is useful just for some visualization. What I really like to look at this for is, do I run the risk of blowing the account, right? Like, what's my worst case scenario? Like, what's my average drawdown that I should see in a lot of these accounts? What's my worst case scenario drawdown? How about, average amount of consecutive losers versus, consecutive winners over the next 100 trades? You could break it down to 50 trades. But important to note, like, these are average stats, right? I'm talking about making some changes. I trade with a lot of discretion. That win rate and risk to reward and average win to average loss is not going to stay static. This gets even more skewed if you are using different risk per trade. But we could show you, this is with the break-even trades broken out, right? Slightly higher risk to reward, slightly lower win rate, 73% with a 0.73. Again, about that $1,000, 6.6% of 15,000. You can see the maximum drawdown increases a little bit. You can see what happens to the ending balance. Again, this gets skewed if you click the button a whole bunch of times. You could also take a look at that trading equity graph just to get a feel. Again, I think this stuff is important just to get an idea, right? If you're risking, $5,000 per trade on an account where you have a 60% win rate, are you going to run yourself into the ground with really high chance? Yes, right? What does that equity look like in general over the long run? I could also take a look and say, hey, I know I wanted to increase my risk to reward and potentially be decreasing my win rate. What happens if I knock, over 10% off of my win rate and I increase my risk to reward by a significant amount, my average win to average loss? Maybe I'm starting to wait and capture, let's say, if I'm risking $1,000 static on every single trade, I'm going to capture $1,200, a 1.2 risk to reward. But I know that's going to make, maybe another few trades come back out of a large sample size all the way to stop me out. Maybe a 60% win rate with a 1.2. What does that look like? You could have an idea of some of the results. Again, the difference is that you'll see maybe more consecutive losses as you drop that win rate down, less consecutive wins. You can see what it does over 100 trade. You could also look at the trading equity graph result. Again, I think this stuff can be important just to play around with, get a feel for. At very least, know on average where you should be. I think it's important if you are discretionary, especially with closes, with entries, with exits, and in general, your win rate, understand that this stuff is going to vary. You could be more conservative with it. You can, dial it back on both win rate and risk to reward, but it can give you an idea relative to the size capital, how much risk you're putting on. Is that going to generate any meaningful results over a large sample size? But more importantly, am I risking way too much? Am I almost always going to ensure that over the next 100 trade sample size, I'm blowing this account? I hardly stand a chance even at this starting metric, or, am I okay to survive? So they also gave me a summary assessment: strong statistical edge, high quality long setups, clear actionable improvements can be lower noise, not taking so much, back and forth, break even, increase the average R, improve long-term equity curve slope. Before I go any further on this, I want to note the account that I'm trading in here again is the Top 1 Futures pre-live account. This is the account that I was moved to after the sim accounts. Some of the benefits of trading in this account, and the reason that you see the type of trading that I'm able to do here, is because there's a lot more flexibility. There's some downsides, which I want to talk about quick, but in a live account with Top 1 Futures, once you get kicked from taking multiple payouts in instant sim funded, Ignite accounts, straight to sim funded pro, taking large payouts, trading well enough, building a buffer, a combination of those qualities, right? You're kicked to a live account with whatever your starting buffer is that qualifies to get moved there. Once you're there in this account that I'm in, there's no consistency rule. There's unlimited, uncapped payouts. There's daily payouts. So you request a payout technically every 24 hours as soon as you're in profit, right? You have a wider daily loss limit and max loss limit, you should, unless you get moved over with a pretty small amount. Some of the downsides are it is an 80-20 profit split. You do have a pretty tight limit on contract sizing. For me, it was one mini or 10 micros when I got moved in. But some of that is unique to the individual trader. What I'll say is definitely helpful for me in an account like this is I really don't have to worry about trailing drawdown at all. It's just a fixed max loss limit, but I certainly don't have any intraday trailing drawdown. I am able to hold my trades longer. I'm allowed to not go stop loss to break even, allow that thing to move into profit and come back on me. I'm able to increase my R multiple without worrying about a consistency rule. That's something to think about that might be different if you're in a sim account. I want to draw some differences here, but I am really able to just objectively look at my trading, say, hey, what's working, what's not working, and continue on. Another downside or maybe double-edged sword here is important to note with any prop firm live account, there's no reset button. You're in that account, at least as far as I'm aware. You're in that account until you lose it. If you lose it, it's probably a journey back from sim to get there again. So, the percent, the amount of payouts that I've taken overall, like numbers wise, this stuff is pretty conservative, right? Relative to the size of the account and everything that I put on. But keeping things controlled, $1,000 losing trades, $1,000 losing days on this size of an account has allowed me to hold on to it, right? Has allowed me to generate small but measurable edge so far, right? Over the course of the last 3 months. And be able to take multiple payouts from it, at least provide the data to say, hey, this looks okay, but there's definitely some risk here. There's definitely some room for improvement. And that's what I look to continue to do. This, to me, guys, is the tough work that nobody wants to do. This certainly isn't everything I do. This is not talking about psychology and mindset, which is something is so important. But taking a look at least every once in a while at your data, I think can be extremely important, whether things are going poorly or things are going really well. And again, I wanted to do it this way. I do journal outside of this. I take screenshots outside of this. I do a whole lot more outside of this specifically. But I thought, how can I take data, use AI, and just generate some basic stats that are going to give me areas that are working well and areas that I can improve in. And just going to all of your trades. If you have a trade report that is a log showing you the direction you traded, the P&L, right? The win or loss and, time of trade, time that you entered, time that you exited. You could get all of this information, plug it into ChatGPT the way that I did, have it spit out all these stats. And then also on the back end of this, even if you didn't journal at all, throw your executions back on the screen. At almost every trading platform, you can throw your executions on the screen. You can take a look at when you got long or short, when you exited that trade, what happened after, right? What was your exit? What did the market do after? Did you exit at break even? Did you add in? Did you scale out? How did that look relative to what happened? And then is there a trend that's happening over the course of time, right? You could go way further than this. There's so much more data, individual days, the sessions that you're trading, right? You could say, hey, I'm taking all of my losses on a Monday. What happens after you take a win versus after you take a loss? What does your equity curve look like across all of these? A million more different stats. I went for the very, very basic stuff, essentially win rate, risk to reward, expected value, and profit factor are very, very simple. You can go with way more if you wanted to. You could also collect a whole lot more data. Again, I want to acknowledge this isn't an enormous amount, right? This is 3 months and, under 100 trades, under 50 trades. This isn't a huge amount of data. Also, last piece I want to finish on here, guys. I'm not the best trader in the world. I don't have it all figured out. I don't claim to be. I don't claim any of this stuff. There are certainly people with way better stats over larger periods of time that are doing way better in live accounts and personal accounts, all of that great stuff. I'm here to display what my journey looks like, the good and the bad, live with you guys every dang day on YouTube. And I thought this video would be good to do as we're coming into the end of 2025. Like I talked about, trading this live account while I am also making some shifts in my own trading, focusing more on personal live accounts, long-term swing trading as well. If you guys want to see more about that, learn more about what I'm doing on the charts, live with you guys, off of the charts, I talk about it all the time across X, Instagram, YouTube, where I'm trading live and doing long form like this, as well as my 100% free trading Discord. I'll link it all right here, link down below. If you want to check out Top 1 Futures, code RDF is going to get you the best deal. Always better than the email, the Discord, anywhere that you find, or as good. Code RDF supports me, supports the channel, supports you with the best deal. Important to note, I'm partnered, I'm affiliated, I'm biased, I stand to make money. Can't be unbiased if I stand to make money. Important for you to do your own research, make your own trading decisions. Also, make sure you read The disclaimer: trading is very risky. I'm not a financial advisor. Most traders lose money. Nothing I say or do here or anywhere else is financial advice. Do your own research, make your own trading decisions, read CFTC Rule 4.41 on simulated trading, which is what this is, even in funded prop firm accounts, and the affiliate and partnership disclaimer, like I just talked about. This is I stand to make money from links and codes of my content, like Top 1 Futures code RDF. Others can't be unbiased if I stand to make money. Thanks, guys. Hope to see you trading live.